Welcome to Do More with Your Money. I'm your host, TJ van Gerven. On today's podcast episode, I am joined by Isaiah Douglas, who is a good friend of mine, understands the financial planning realm, and is also a Bitcoin advocate. So, Isaiah, please introduce yourself to the audience.
Yes, great to be here. We've known each other for quite a while. So we launched financial planning firms way back in the day together at the same time, not together, but like at the same time frame. So we
Yeah.
were going through similar struggles, challenges, things going on. So it's been cool to stay connected through that. But yeah, CFP left doing the financial planning gig for a variety of reasons we won't necessarily get into on the podcast, but love it, right? But one of the big passions of mine and something I talked about with clients and pretty much anyone that would listen to me since 2020 was Bitcoin. And I think Bitcoin is the most important financial adoption story of the decade. And I said that in 2020, and I still believe that. And I think we can unpack why I believe that
Yeah.
throughout this conversation. But yeah, so what I do today is I work on the private client team at Swan Bitcoin. So I get to talk Bitcoin all day, every day, which
Awesome.
is a joy.
No, that's amazing. And I know how passionate you are and obviously understand the space better than 99% of people, which is why I brought you on the podcast today. You've certainly challenged my beliefs on Bitcoin over the years. And I've definitely been somebody who was a skeptic and changed my mind on honestly and truthfully, just because I came up in that traditional sense of finance, of cash flows and owning businesses with cash flows. But this is really something different. And I think it's important to educate my audience on why it could make sense because I am somebody who personally invests in Bitcoin. I'm not saying that you have to, but I think it's important as advisors to practice what we preach and just educate our clients on why this could make sense. So really what I want to do today is just get your opinion on how Bitcoin fits into financial planning, portfolio management, like from a practical standpoint, so that we can start to educate again the audience on why it could make sense for them.
Sure. And I think that the titling of your show, Do More with Your Money, is a great place to start because I look at Bitcoin as money.
Right.
And for a lot of people, they're going to be like, hands up already. I don't agree with that. How can it be money? And we'll dig into it. But understanding fundamentally like what is money and what's the purpose of money for a lot of financial advisors or planners or people that are just working that have an advisor, I don't think we stop and think about that question very often and consider what is good money. Like asking that question, what is money and what is good money? And so that is the place that I like to start. Again, I come at Bitcoin from the monetary side, where I think you can also come at it from the tech side, where some people will be like, oh, it's just this like weird tech stuff, magic internet money. I'm not really interested. But I think the idea of Bitcoin is that it is a better money and it solves some of the issues that are out there. And so, what are some of the issues out there with our current monetary system or money today? Well, our money doesn't hold value, and so we all understand that as an issue. So some people call that inflation. I do, right? The increasing of the money out in circulation, that's inflation. We're inflating the money supply. But what does that actually lead to? It leads to housing prices that are unaffordable for a lot of people. It leads to grocery bills that are really unaffordable. It leads to healthcare being really expensive. And so all of a sudden, we were just talking offline, you can be making good money and feel like, man, I just don't have a lot. And this term of you got to put your money to work
Mhm.
always cracks me up, and I've said it lots as an advisor, right? We gotta put that money to work. Why do you have to put your money to work when you already worked for it? You already worked 40, 50,
This
60
is yeah,
hours.
this doesn't make sense.
I'm busting my butt. Why do I got my money to work again? And it is one of those things that it's like, oh, if I stop and think about it, that seems odd. So
Sure. So I think it's one thing that I would like to explain as simply as possible is just the origin story of Bitcoin and why it was created, because I don't think people understand that there is a track history now and it came for a reason. And all the who created or the people that created it, it's important to understand that because it's about incentive structure as opposed to who controls the
sure.
asset. Yeah.
Yeah. So Bitcoin, the white paper, right? The original foundation of Bitcoin is a document that anyone can read. It's about 9 pages long. It was written by a anonymous founder or writer, Satoshi Nakamoto, and it dropped on Halloween in 2018, or sorry, 2008. From that standpoint, and then the first Bitcoin block, so like the first Bitcoin transaction, all that happened then the next year in 2009.
And
And so
what
what?
was the reason for the creation?
Yeah, so it was coming out of the great financial crisis, right? And so the idea was, hey, we've seen the attempts of what kind of a centralized kind of government controlled money does. And what it does is it centralizes power and there's a lot of corruption within that. And so you saw the Occupy Wall Street post great financial crisis, and people kind of saying like, why are people getting bailouts if they have certain privileged positions, but I just lost my house, I lost my job, I'm not getting those same benefits. And again, the idea that Bitcoin had this immaculate conception is something that can't be recreated. And so I say that because the fact that no one knows who Satoshi
Right.
is, or it's a group of people, is actually a really good thing. It's a feature, not a bug. And the reason being is Bitcoin is what is considered decentralized. And we can go into nuance and get into weeds, and there's depth to Bitcoin. I always joke that Bitcoin's an onion. You can have one layer and you're like, oh, I'm satisfied. This is good. But there's so many other layers underneath it. And it does take time to understand. I'm not going to do it justice on this podcast to give all
Sure.
the insights. But Bitcoin was basically created to where it is on the white paper at the beginning. It says peer to peer electronic cash. It's allowing you and I to transact and interact without a third party or an intermediary that can, stop that transaction, that can block it. And the idea being that I can store my wealth, store my value, store my energy that I spend at work
Right.
in an asset that no one else can control. They can't inflate the supply, they can't stop it, and I can do whatever I want with it. So it is the idea of freedom money.
Right. And I think that's a really great concept. And I do like to tie it to gold because I think for most people that is one of the easiest thing to compare to as far as, hey, this is digital gold, but it actually in a lot of ways has much better properties than gold because of the practicality of it. And how would you explain gold versus Bitcoin?
So the way that I like to explain gold, and then you have the dollar, which a lot of people are calling fiat currency, right? So if you hear the term fiat currency, it's basically just, hey, this isn't backed by anything other than some sort of promise. And then there's Bitcoin. So gold has been money for 5,000 years. And then let's say I'm in Rome back in the day. I'm going to go to the Colosseum, have a hot date. I want a new tunic, right?
For
Ounce of
sure.
gold gets me a nice new tunic. I'm looking sharp. I'm ready to go. In 1970s, same thing. I'm out in California. Maybe I'm like, I need a new suit. I'm going to go out and, hit the town. Ounce of gold, nice suit. Today, ounce of gold, about $2,000. I can go get a nice suit. We can go out and enjoy a night on the town. I don't wear suits, but it's a good example of of gold basically being a stay wealthy type of money.
It
Like, hey, I'm going
retains
to
its
get
value.
rich, but it's retaining its value. It stores its value over time, which is really critical.
Right.
But what happened? Why did gold fail? So you might hear people say, oh, we should go back to a gold standard. You don't really want to go backwards because gold is still an analog version of what Bitcoin is, and it does have some flaws. What happened is all the gold became centralized. So what we did is we trusted third parties, we trusted banks, and said, hey, we want to deposit this gold. I don't want to hold it in my house. It's hard. People
Hmm.
might come and rob me and take it because that's a bearer asset. And so what we did is we put it in banks and we got these certificates of a gold issuance, and it was so many gold bars, gold coins, whatever backed the issuance of that paper money. Well, that paper money then allowed for commerce to flow, and it made it a little bit easier. Over time, what banks notice is, hey, no one's coming and redeeming this gold. Maybe we can just issue a little bit more of this paper. It's the idea of if everyone is sharing a car and we're in a parking garage and we just notice that not everyone's coming at the same time, but then all of a sudden people come and it's vacation time and your car's not there that you've been sharing, there's a problem. And that's when you would see a bank run, you'd see these different issues. And that's led to different crises over time, but it's not gold's fundamental flaw. It's the flaw of what we did, which is we issued more paper notes than was redeemable back into gold.
Hmm.
1971, President Nixon closed the gold window and said, hey, this money is no longer redeemable for gold. And so we moved purely on a fiat standard or a US dollar standard. What did the US dollar do that gold couldn't? It's really hard for me to send gold to you up in Boston. I got to hire a
Hmm.
Brinks truck, guards. It's just expensive. It's just like, how the heck am I going to send this to you?
Yeah.
But currency, I could send it across space really easy. These paper monies, these notes, we could redeem them. It was very easy. They were portable. It was easy to get it to people across both the country, but also internationally. And so it helped with kind of this idea of moving towards a global society. But what it failed at doing, like we talked about at the beginning, is it doesn't hold any value. What we've done is we've devalued the purchasing power of that paper money over time. So the example I give on Bitcoin is if gold and the US dollar, they're dating, they fall in love, and they have a child. That child has the best of both of these parents, right? Store value over
Right.
time, easy to transact. That's what
Right.
Bitcoin is. It takes the best of both of those parents. And that to me is what Bitcoin is.
No, that makes a ton of sense. I think that some people, when you hear store of value, they don't understand that because the price is so volatile, which is a function of supply and demand. And so, can you just touch on why it is a store of value because of the finite nature and because of the blockchain as far as like some people can't understand like how is it self-regulated, right? And how do we know it's going to continue to be self-regulated?
Yeah, a couple different things to unpack there. So the first thing is every asset that's ever been money, we've used different forms of money over time, salt, stones, beads, all these different things. We typically will fall under some asset or something that is the best representation of money that's out there. Now, the dollar is a little different because it's kind of been forced on people, and I'm not going to go down to why that's all happened. Is the things that happened historically, but typically everything coalesces on one money. We don't want to use tons of different money; it just makes it inefficient. And the idea of good money needs to be a store of value, a medium of exchange, and a unit of account. Like it's going to be able to do that to where you can store your value in it, but it has to be able to store value before it can be a medium of exchange. Before you want to accept it for your services, so your financial
Mhm.
planning services, before you want to accept Bitcoin as payment, you want to make sure it can actually store value and it's worth something.
Sure.
So it's got to go through that like first gate before it can become a unit or a medium of exchange. And then once it's a medium of exchange and we're paying for stuff, then we start measuring our net worth in Bitcoin. Then we start paying for everything in our unit of account, how we
But
frame
how do
everything in
we
our life.
have confidence in the system that it is maintaining that value?
Yeah. So that is, I guess, the steps of how it becomes money, how people will adopt it, how we will think about it. It's got
Sure.
to be store of value first, then it'll become medium of exchange, then it goes into unit of account. So Bitcoin is code, right? So the code is open source. So anyone can go and audit the code. You can run it on your own machine in your own home for $300 in a weekend. It's not difficult to do and up and running. And then what you do is it's a consensus mechanism where you opt in. And so with consensus, you're not saying, "Hey, TJ, trust me, I got your money." You can say, "Hey, TJ, I know that I have my money because I can verify it based on this code. I know exactly how many Bitcoin are issued. I know how many are going to be issued in the next 10 minutes. I know all the transactions that ever happened." It's an open monetary ledger. Like JP Morgan and Bank of America have a ledger, but it's
Right.
closed. So let's say you have your account
Right.
at
So you don't see
Bank of
that.
America. I have my account at JP Morgan. They're going to debit your account, credit mine. They don't share that in broadcast and say, "Hey, TJ just paid Isaiah, $1,000." Which
Mhm.
is weird because Venmo does that if you ever pay someone for like beer or if there's some privacy things there with Venmo that's funny. But yeah, the idea with Bitcoin is from day one, from the white paper, it was there's 21 million. There will only ever be 21 million. The issuance schedule is, hey, for the first 4 years of life, every 10 minutes, we're going to issue, or every about 10 minutes, we're going to issue 50 Bitcoin as rewards to the miners to encourage them to protect the network. And we'll talk about
Sure.
miners
And
in
I
a
don't
second.
yeah, okay, cool.
But then the issuance schedule of the money then goes from 50 to 25 to 12 and a half. So every 4 years, the supply lessens. So it gets cut in half. And so that's called a
Mhm.
halving. And we have another one coming up here in April where we're going to go from 6.25 Bitcoin every block or every 10 minutes approximately to 3.125. So those rules have never been changed. They have never been
Okay.
broken. So you can go back to
Right.
2009 and say, hey, these rules have been in place. We've not changed them. So you can have confidence moving forward. It's the Lindy effect, right? The longer something's been happening, the longer you can feel more confident in it. So that's a way for you to feel fairly confident that Bitcoin's not going to all of a sudden change overnight because
Sure.
it's a consensus mechanism. So if I hold my wealth in Bitcoin, am I going to vote for there to all of a sudden be 50 million Bitcoin? That dilutes me. That's stealing from me. No one would want that inflation, right? So they wouldn't want that increase in the money supply because inherently humans are selfish and Bitcoin actually kind of harnesses human greed and selfishness in the way that it's constructed to say we are resilient and robust against that and actually uses it to help protect the network, knowing that
Mhm.
everyone's going to be self-interested.
Yeah, no, I think that's a great point, and I think this is where people get confused because it's operated as designed, like you said, since inception, but then you have things like FTX or, like, crypto in general, and it gets conflated with Bitcoin, so not to jump away from the miners, because I think it is important, what is the role of the miners? But after that as well, the distinction between crypto and Bitcoin, because that gets conflated a lot.
Yeah. So Bitcoin is decentralized. So what does that mean? It means that no one party controls it. And so a lot of times, if you think about the consensus model in Bitcoin, you have the Bitcoin miners. So they are incentivized to broadcast transactions. So you plug them in, think of it like a computer server. It uses energy. It is rewarded by trying to solve a random number that either gets harder or easier over time. So if
Mhm.
everyone tomorrow said, hey, this Bitcoin mining thing sounds great. I heard Isaiah talk. He's obviously very intelligent. We definitely got to get in this Bitcoin mining thing. And everyone went out and bought Bitcoin mining. The difficulty adjustment in the next 2-week period would increase to keep that 10-minute block time, so 10-minute transaction time in place. So
Is
it
there any downside
self-regulates.
risk with that, though? Is there any downside risk with that becoming more complex over time?
It would just be the energy consumption, and that's where you'll hear people say, "Well, shoot, Bitcoin uses more energy than a small country. It's obviously gonna boil the oceans and kill everyone." That's where
Mhm.
you'll hear those kind of statements, and the way that I would encourage someone to think about it is compared to what? So Bitcoin is a global monetary network that allows humans to store their wealth that cannot be confiscated, changed,
What's that
corrupted,
worth?
or stolen.
Yeah.
Is that worth something? In my opinion, it is. I can't convince you if you don't believe it is.
The
But it
positives are
uses
worth more
yeah,
than
it
the
uses less energy than Christmas lights every year. Do we think Christmas lights are important to humanity?
right.
I like Christmas lights. I think it's worthwhile. Is drying your clothes, a clothes dryer worth it? Like,
Right.
everyone's gonna make those own decisions, and you shouldn't dictate what someone else does
But is the
with their.
compounding nature of that going to get more energy
It
consumption?
will. It is going to consume more energy, and that's a good thing because the more energy that it consumes, the more protected the network is because you can't attack it. So there can't be a bad actor that would come in and try
Mm.
to mine and take that. So actually, same effect, right?
Okay.
The more energy that's there is actually the better. The other thing that's really interesting is the amount of energy and where it comes from. Bitcoin, the biggest input to Bitcoin mining as a business is their energy costs. So what do they want to find? Cheap energy, stranded energy, and energy that's not being used. So about a third of all energy production in the world gets lost from where it's created to where it's used in transmission. So Bitcoin mining can go into remote parts of the world and harness energy that's just being wasted. And so you'll see that
Yeah.
in the makeup of what Bitcoin mining is constructed with. A lot of hydro, they've flared gas. So if you go out to the Midwest and there's mining wells and rigs, the flame at the top of one of these big stacks, that's they're flaring methane gas that they can't use. And the EPA will come along and say, hey, you can't flare that gas that much because it's polluting. So what will happen is they'll take a little shipping container, put Bitcoin miners, put a generator in there, and they'll use the gas, mine Bitcoin. It helps the environment be better, and it helps the profit and loss of that oil company as well. Bitcoin mining is a really unique energy consumer where it's the buyer of last resort. So you
Mhm.
can actually plug in Bitcoin mining and actually make the grid more sustainable. Good example in Texas with ERCOT, they have these rolling brownouts occasionally where it gets really hot or really cold. They need more energy. It's hard to have them say, "Hey, turn off all the AWS servers," because people are stuck at home. They're gonna want their Netflix, they're gonna want their Dropbox access, all that stuff. But Bitcoin miners could say, "Yeah, we can turn off and push that energy back on the grid," and they may only need it 10 days out of the year. And so it's much better than turning on what they call peaker plants, which would be like coal-powered plants. So you can have better energy grids by leveraging Bitcoin mining, and we're starting to see that all over the world. So
Okay.
that's a tangent. There's way more depth there if you want to go in there on the Bitcoin
Mm.
mining front. But Bitcoin miners basically they're incentivized to solve a complex equation, expend
Mhm.
energy, and they're paid in Bitcoin. So the only new way that Bitcoin gets issued is when you solve a Bitcoin block. So
Mhm.
every 10 minutes they're competing on average. They solve a
Mhm.
block, they get Bitcoin rewards.
But if there's only 21,000,000 ever that will be in circulation, though, how does that not run out to incentivize the miners to keep
Yeah. So
transacting?
this is one of
Yeah.
those, they call it FUD, fear, uncertainty, and doubt. So it's
Mhm.
the idea that okay, when we get to 2140, which would be the last Bitcoin block probably mined, A, it's a long time from now, but B, the idea is that you bootstrap a network by incentivizing people early on. So 50 Bitcoin in a 10-minute window today is worth a ton of money. Call it $2 million in today's dollars. So what that Bitcoin that would have been mined in 2009, 2010. So what happens though is when I want to include my block in a transaction, I pay a fee as well. So there's this kind of open competitive fee market where if I want to send you money really quickly, I might pay a higher fee. If I'm cool to say, you know what, TJ, I'm going to send you this money, but it can get there in a week. It doesn't really matter. Just if you're shipping something from UPS, right?
Mhm.
Hey, get it there as fast as possible. This is super urgent. Or, yeah, it's a book for my cousin. They'll be fine. They'll read it when it gets there. 2 weeks is fine, or a week and a half is fine. I'm not, overnight it. Similar thing with Bitcoin mining in the transaction costs is they get the block reward, which today is the biggest element of their payment as a Bitcoin miner, but they also get the transaction fees. So the thought is, as Bitcoin gets adopted, as it becomes global money, the transaction fee and the
Will take
volume of
over.
transactions will take over. Is
Okay.
the
And there'll be enough transaction fee to incentivize the miners to still continue.
Yep.
So
But there is a lot of people that will attack that and say that's a flaw of Bitcoin.
okay, interesting. No, it's good to know. So let's take a step back real quick. I mentioned this before. So can you explain as simply as possible, like the difference between Bitcoin and cryptocurrency in general, and why people should think of them a little differently? Because I do, at least.
Yeah, I do too. So I've had people say, "Oh, you're the crypto guy." And I'm like, "Whoa, no, I'm a Bitcoin person. I don't really care for crypto." And there's a couple reasons. So first of all, most of crypto is akin to VC investing. A lot of zeros, maybe you hit a big winner.
Mm,
But a lot of it is taking Bitcoin's code because it's free open source and they fork it. They basically take the attributes and they change something. They say, "Hey, we're better. We do XYZ. It's better than
right.
Bitcoin." And so a lot of it is VC investing where they look at how can we market this? How can we make a shiny website? How can we act like we're doing something on the blockchain, which is the cool buzzword for a while? Or can
Mhm,
we do decentralized finance? Or can we do NFTs or do these other things to garner attention? But what you notice is over time, there's 20,000 plus cryptocurrencies that are out there outside of Bitcoin. If you measure them in Bitcoin terms, there's four that have ever made a new all-time high when measured in Bitcoin terms after their initial launch 4 years
mhm,
later. So what does that tell me? That tells me, hey, a lot of these things are trending towards zero when measured in Bitcoin terms. What are they actually accomplishing? Is there anything they're doing that's actually real? And the answer, most of it is not. Most of it is speculation. Most of it is a
right.
buzzword. It is a pump and dump. It is helping VCs turn their money quicker than actually going through a regulated company and
Right.
launching and getting an exit in 5 to 7 years. Maybe they can exit in 2 to 3, make a bunch of
Sure.
money and return it to their investors. And so that's going to change too. I think the SEC, Gary Gensler, and others will, and they
Correcting
are
that.
down, and you're starting to see that. Not
Right.
that I'm a
Because
big
again,
government.
Bitcoin is there is no, the entity Satoshi, they stepped away, so there is nobody
If
who
you wanna push
owns.
your thumb on Bitcoin and say, "Hey, I wanna stop this," who are you going to? Because if you come to
And
me
that's
and
why I wanna start with the story because I think it's important to recognize that, like, it came out of an idea because there was some funny business going on with manipulation of money, right? Like Federal Reserve or just banks in general, and now the person steps away, that's important because it's not controlled by somebody, whereas crypto, like you said, it's a conduit for raising capital, and they have control over that cap, and they can pull the rug from underneath you.
so the quick version is there's a big company called A16Z. They were an early investor in Coinbase. They're an early investor in lots of different crypto projects. So you launch a cryptocurrency, you get enough marketing, you get enough buzz, you get it listed on Coinbase. You're able to then dump on retail investors who will buy it, and then you exit and you make your money and you repeat, rinse and repeat and rinse and repeat. And that's what we've seen is every kind of 4 years there's a new cycle. It was the ICO boom back in
Mhm.
2017, which was the initial coin offering. There was going to be a Kim Kardashian coin and a TJ coin and an Isaiah coin. Everyone was going to tokenize their world, right? I don't know if you remember that, but everyone
I
was
do,
going to
yeah.
have a token. Then this most recent run was decentralized finance, which ended up just being leverage upon leverage of flipping one token to another token to earn yield on this other token paid in this token. And it was just a house of cards, not really do anything other than just making money for people that were selling different strategies or different things, or NFTs, which is the non fungible tokens, which I'm not going to argue. I've never really got regular art, so I'm not going to tell someone like it's stupid or it's not worth it. It just, ultimately, if you have an NFT on a blockchain that's not going to exist in 3 years, what's the purpose of having it? Because it's not going to be there. Yeah, I think crypto just needs to be looked at as speculation, where Bitcoin is solving a real world problem. And so, if I'm a VC
Sure.
investor, the total addressable market is what they look at, right? So, I'm looking at total addressable market. Bitcoin is global money. Every single human on the face of the earth needs good money. They want good money because that is the measuring stick of our prosperity. As much as you don't want to think about it, it is our energy and our time is how we store
Mhm.
our money.
Yeah, it's the greatest
And
story ever told, money.
so we need to have a good sound money for a good sound economy and a good global system. So every single human in the world is going to want good money. And I feel like I can make a strong case why Bitcoin is better money than our alternatives today. And so I think that's why I go back to that statement I made earlier. It's the adoption story of this decade. And I'll say it'll probably be the adoption story of next decade too, because it's going to play out over time. It's not going to happen overnight. And that's where we can go back to that store of value comment because people will say, hey, there's really volatile. How does that work?
Mhm.
But yeah, any other
So
questions?
yeah, so here we go. So let's say, all right, let's say, Isaiah, I believe that Bitcoin is a store of value. I believe in the fundamentals of the blockchain and that it's self-regulating and the miners are incentivized, all that stuff, right? I believe in how the technology works. But why should I, given that there's still risk from volatility, right? Prices change, and that's based just on supply and demand. Why should I include that in my portfolio of traditional assets, whether it's, stocks, real estate, bonds, commodities?
So I'm going to give you familiar with like, the bell curve, right? Like left side, right side,
Mhm.
like
Yeah,
high
yeah.
achievement, super IQ, low. I'll give you left side of the bell curve. 10 out of the last 13 years, including year to date, Bitcoin's been the number one performing asset. 76% of the time, it's the number one performing asset. The other handful of times, it's the worst performing asset. So
Mhm.
it typically goes 3 years, really strong performance. 1 year, it's dead. Everyone calls it dead, and then it revives. And then there's 3 years of performance, and it dies. So there's typically been a 4 year cycle of kind of this adoption. Now, does that mean that Bitcoin is good just because it has good performance? No, I don't necessarily think it does. But what it shows you is like number go up. So NGU technology, right? It is important because it gets people interested. And every cycle, you'll see people come into the Bitcoin space that come for the wrong reasons. They buy really high, they sell really low, and they get burned and they say, I'll never touch it again.
Right.
Others that come in, they learn and actually understand what Bitcoin's trying to solve, and they say, oh my gosh, this is
This makes
something that's really
sense.
important, and I'm going to hold it. And
Yeah.
so you've seen these drawdowns, and I don't know too many people that buy stocks that go down 80, 70% that then hold it
No,
and
that's a hard to
move
stomach,
forward.
yeah.
And so Bitcoin holders are typically pretty intense. And if you're on social media, you'll see that at times. Like they
Mhm.
understand what they own and they don't sell really. And so even in the 2017, 20,000 to 3,000 drop, one of the things that Paul Tudor Jones, who's a famous kind of hedge fund investor and guy that's really known on Wall Street, 75% of hodlers, so hold on for dear life, they didn't sell any of their Bitcoin. And so what you get is like this adoption cycle continues where people just don't part with their Bitcoin. So what does that tell you? If there's people with so much conviction, that is usually a telltale sign that they have an idea of what they own and they know, hey, the
Sure.
price is not the thing that's most important. The other reason that you'd want to own it, so not just, hey, the performance has been really good, look at it, just trust me, because past performance doesn't guarantee future results. But let's
Sure, of
go
course.
back to, hey, in 2019, there was a rule set that was issued, and that rule set has not been violated. 21 million, every 10 minutes, there's going to be blocks. It's still decentralized. And it's one of these things that hasn't changed. So if that is true into the future, I know that I can store my value there. I don't know who's going to run Apple in 10 years. I don't know what
Mhm.
products they're going to launch. I don't know how successful they're going to be. Are they going to be disrupted? And I think we could talk about disruption in Bitcoin as well, because that might be a question that people have. But the idea of saving for future goals with Bitcoin, it makes life cheaper. And a good example, and there's a site called Priced in Bitcoin 21 where you can look at the price of goods priced in Bitcoin over time and it drops. So, case in point, it was, I think, 70 Bitcoin for the average median house in the United States in 2017, and it's down to 12 today. Now, Bitcoin's dropped twice, 80 and 70%. So, which thing could you save for that stored more value to buy that house? The answer is nothing. There's not really anything else that you could have saved for. So, when I say store value, I'm not saying to pay your utility bill in 6 months. It is if I have a goal that is years down the road, or I'm saving for retirement, or I'm saving for to get married, or buy a house, or take this big dream vacation. Saving for Bitcoin actually works really well for those goals because of the way that the network is getting adopted over time.
That makes sense to me. So, some questions that I would say playing devil's advocate or something like that. So, let's say Bitcoin reaches full adoption. I don't really know what that means, but does there become a point where there isn't so much price volatility and it from a investment standpoint, it's not really like a good investment because it's kind of like gold, right? Like we don't consider gold a necessarily good investment. It's a good store of value, or it has been compared to the alternatives. So I guess is the return potential so good because we're so early in adoption, or is there still really good return potential even if it was fully adopted?
I think it's a great point. I think full adoption, again, I don't know exactly what that looks like. Yes, Bitcoin, the volatility would be smashed down if everyone was like, hey, I'm going to save 5% of what I make
Right.
every week or every 2 weeks or every month into Bitcoin. Yeah, you would see the price would significantly go higher, right? Because there'd be all this demand. Because again,
Risk
I have a
decreases.
fixed supply and the demand goes up. The only way to represent that is through the price increasing, which is why price increasing is important as much as we all might not like to say it.
Mhm.
That's what brings people in and makes them pay attention. Because if Bitcoin's price never really moved, it was still worth cents after since 2009, no one would be talking about it.
Yeah,
But
right.
when more value comes into the space, think of Bitcoin as a sponge. It's going to soak up the dollars around the world. There's about $900 trillion in assets, bonds, real estate, stocks, currency, art,
Mm.
precious metals, all these things. And so Bitcoin's competing for, where do I want to store value? So yes, if it gets to the point where it is fully adopted, and let's say it's
Gold, let's say,
$100
so
trillion asset, then yes,
market
it's going
cap
to
of
go there.
gold
Yeah.
even. Yeah.
It could feel more like that. But the challenge is, it's not just a store of value, because then it's a medium of exchange and it's a unit of account. So you actually then need to look at, what's all the store of value, 900 trillion. Then what is the medium of exchange value? And then what's the unit of account value, and multiply all those by each other. And then what do you get from a full adoption price? It's an insane number for Bitcoin. An
Okay.
insane.
Okay, so if I'm hearing this correctly, the reason why it could make sense as a part of a portfolio is that it's in early adoption, and that because of the investable universe and the places it could take up, that it has really good return potential.
Yeah. And the other thing is, the law of diminishing returns is something that we're used to. Like, hey, you see a small company, Netflix early on, Tesla early on. Well, then it grows really fast, right? And you're like, oh, you can't chase that. Right? The returns were so huge. It's obviously the best days were in the past. Bitcoin's a little different because it doesn't have the law of diminishing returns, because the adoption cycle is still so early. And there's a thought that probably less than 1% of the world has any sort of material allocation to Bitcoin. When I say
Mhm,
material, let's say more than like a 5% allocation
mhm.
of their total net worth.
Right.
It's probably less than 1%. And we're at a $38,000 Bitcoin price, and it's sub $1 trillion. Bitcoin could go to 200 trillion, could go to 100 trillion. And that might take a long time, or it could go very quickly. It really just depends. But that law of diminishing returns, like, so much of the adoption's ahead of it. It's actually not behind it. And so to see it grow from zero and monetize from nothing, with no CEO, no team, no marketing department, no nothing, it's pretty impressive. But I think the biggest returns moving forward, and it's probably still out there, it's not necessarily what's happened in the past. And yes, oh, if I would have bought Bitcoin in 2017 when I first heard about it,
Mhm,
would have been great. I didn't.
mhm.
And that's okay.
But the
Most people
return
hear about
potential
it.
is still
Yeah, and so there's two ways that people think about it. They either get really salty that they should have bought it way back when someone told them,
mhm.
and they're like, "Oh," and they just get mad and they never do anything, or they say, "You know what? I should have done it, but you know what? The best time to plant a tree was yesterday. The other best time is today."
Sure.
And you just move on and say,
You
"Hey, is
don't
there
if
ever a..."
you're wrong, you should make a change.
Yeah, when presented with new information, the
Yeah.
ability to change your mind is actually a sign of intelligence.
Right,
It's
exactly.
okay to change your mind. I think in society, and this is totally not Bitcoin related, so many
Right.
people get stuck in one ideology or one thing, and it's like, hey, the information's changed. It's okay to change your mind. That's not telling that you're
Exactly. You're a
wrong.
fraud or yeah, yeah.
Yeah, you're a bad person. It's like, oh no, you just changed your mind. That's okay. You're allowed to do that.
No, for sure. I completely agree. And that's why I brought you on the podcast today. And so to ask a harder question would be like, is there a chance that Bitcoin fails and goes to zero? And what would that reason potentially be? First considering downside.
There's never it's 100% guaranteed. Like, Bitcoin's going to the moon. It'll never not be successful. Like, sure, there are ways that it could fail. I think,
Just give me
how
an
does it?
example, like
Yeah.
regulatory.
I don't think it's regulatory. I
Okay.
think that the biggest challenge would be if the federal governments around the world they found religion and finally became responsible and didn't just spend money like a drunken sailor.
Right.
That
There
might
wouldn't be
be,
as much of a need for.
maybe there's not as much of a need, so that maybe could slow adoption. I think the idea of the regulation, like, hey, we're going to tax it a bunch, we're going to outlaw it, we're going to make it illegal. I think if you outlaw it, you give validity to this thing. Because if I'm a politician, I've said Bitcoin's nothing, I'm not going to talk about it's fake money for years, and all of a sudden I outlaw it. All I've said is that I'm giving it validation that it is a
Sure.
threat.
Sure.
And so all that's doing is a stamp of approval. It might not
Mhm.
feel nice, to be someone that's a Bitcoin holder and feel like you need to be breaking a law or anything like that. I think the biggest threat to Bitcoin is one of those where there's changes made to the protocol, and the ripple effects or the butterfly effects are not seen, and it
Mhm.
fundamentally breaks it where it cannot be used as money. And I think an important thing that we've talked about Bitcoin is Bitcoin main chain. So Bitcoin layer one, right? Every 10 minutes, all this other stuff. Bitcoin scales just like the internet does, right? TCP IP is the base layer of the internet. Bitcoin layer two is the transaction layer. So Lightning Network. So for me to actually buy a cup of coffee or go to a restaurant or buy a beer, buy tickets at a sporting event or something, That's going to be transactions done on layer 2. That's not necessarily on layer 1. That's getting probably way more into the weeds than we need to today, but
Sure.
Bitcoin's going to scale that way. But let's say you make a fundamental protocol change at the base layer, and let's say it breaks everything up from there to where it is unusable. I think that is the biggest threat.
And that could
And
happen because people vote on that as far as
yeah, so
protocol
everyone runs their version. So not everyone, but if
or
you
a
everyone is
miner?
able to run their own version of Bitcoin Core code, right? So I
Mhm.
can run my version. I don't have to update to the latest version. So it's always backwards compatible. But let's say everyone auto updates, someone decides to push out a change, and enough people agreed and said, "This is a really good idea, TJ, we should do it." That
Mhm.
change then brings in these impacts that are coming from outside, and all of a sudden it can't function the way that it has in the past.
So
All
would
of a
it,
sudden,
like would that be the same as saying the Constitution and, like, to
yeah, but it's changing the fun. Like they're like, "Hey, all of a sudden we're going to change. It's not 21 million now. There's going to be way more, or we're going to make all these
Sure.
changes." And like, it just complete to me, that's how it would fail. And
Okay.
so a lot of what Bitcoin on the main chain, right? It's pretty ossified. It's not going to change a ton. There's going to be changes made. There's going to be improvements. There's things called Bitcoin improvement proposals or BIPs. They come,
Mhm.
they talk about them, they debate them. The thought of Bitcoin is do no harm, first and foremost. So the idea is that it's not going to iterate and change. It's not going to move fast and break things, which is what crypto does. Move fast, break things, take the VC model. And you don't want that in your money. You want kind of something that's like boring, consistent, reliable. You can count on it, right? That's what Bitcoin is. And that's what Bitcoin has done. And I think making unnecessary changes that open up an attack vector, that to me is the way that Bitcoin fails. Not that you
Okay.
need to be stuck in the past and never evolve, but you need to be very careful and say, is this moving the needle enough to open up the risks that are there? And I think that's probably the biggest threat.
Okay. Yeah, no, I think it's good to
There's
understand the
so
range.
much nuance to get into the weeds of what
Sure.
that can look like that I'm probably not even prepared to or even knowledgeable
Sure.
enough to purely
Because I
articulate.
think it is fair, right? Like, when I work with clients and I do total stock market approach, right? So you're owning the investable universe, and if you think about the downside risks there, right? If VT, Vanguard Total World Stock Market, for example, goes to 0, that is, wow, we have bigger problems, right? Like, we're in an apocalyptic environment or, like, capitalism has essentially crumbled, and so it's hard to envision that scenario, and I'm not saying it's not possible, right? It is possible, but it's, like, doesn't matter anyways, and so I is there a situation though, like with Bitcoin, it goes to 0, but then, like, traditional markets keep going, right? It has a longer track history. So, I guess, like, how would you in that case, you would consider it riskier, obviously, right? Because of the permanent loss of capital potential?
I don't personally view it riskier, but I think with a better knowledge and understanding and study of Bitcoin, allocations increase. That's what I've noticed in my own personal life. That's what I've noticed in
Yeah.
the lives of people that I've been around. And it's not something that you go from 0 to 100 on an allocation. I think the most risky allocation to Bitcoin is 0.
Okay. And listen, I like to play devil's advocate, and
Oh, yeah.
I am a believer as well, but I do wanna make sure to consider the range of outcomes with any investment, right? Because to me, it's like risk and fine, volatility is fine, that's part of investing, but permanent loss of capital, like, that's the real risk. And so I guess that's why I wanna get your opinion because it's like, again, do you envision a scenario where the world stock market ceases to exist? Maybe that would actually Bitcoin would continue to go on in
Yeah.
that case, right?
I don't envision like the stock market ceasing to exist. What I do think is a real challenge and a real issue is, as a country, we're approaching basically 34 trillion in debt. And if you look at the unfunded liabilities, it's like 290 trillion. It's going to be roughly about $300,000 per household in the United States of debt that's owed. And ultimately, the US has had the global reserve currency since, the 70s, really, where the global oil, and I say that specifically because of the petrodollar system, but we've basically been the oil of the machine of the economy for the entire globe. We export dollars from the United States. We don't make a ton of stuff here. We basically hollowed out our manufacturing capabilities to fund the world, to
Mhm.
lower costs and do different things. Ultimately, though, money is a confidence game. And what happened in 2022, I believe, or 2021, there was a couple different things that happened. So Russia invaded Ukraine. Was that 22 or was that 21? I can't even remember what year
Uh,
it was. I think it was
22,
22.
yeah.
I think it's 22. Anyways, so Russia invades Ukraine, right? Terrible situation. Lots of loss of life. It's an awful situation. What happened was the Russian reserves that they have sold their oil for were held in US treasuries and in dollars and different bank accounts around the world. We froze those assets. Us and folks in the European Union, we basically stole their money and said, this is not really your money. And so that put out an alarm bell to everyone in the whole entire world of saying, the money is not really yours. It's yours if you're nice. It's yours if you follow the rules. It's yours if you don't piss us off. But
Mhm.
as soon as you step out of line, we're going to punish you. And that's actually never happened in a conflict where we've just basically confiscated money before. And the other thing was in Canada for the Ottawa
Right.
truckers. Anyone that donated, anyone that was there had their bank accounts, their investment accounts all frozen. Now they got them unfrozen fairly quickly because there was going to be a flight of capital out of the country where people were starting to just take their money out because again, they saw the same thing. Even if they didn't donate, even if they
Mhm.
weren't involved, they were like, oh, they're freezing assets for these people that disagree with the government. So imagine a world where the person in charge is the person you hate the most, the person you think that would do the worst job, whoever that
Mhm.
is. Picture that in your mind. Now imagine that they have control over the money. To me, the biggest risk is having something where I'm valuing. So today, stocks, bonds, real estate, all these things, they're all valued in dollars. We all have dollars as our unit of account.
And
And
they're
the
owned
way
by an institution. You don't have direct ownership over.
yeah, and you
Yeah.
don't have true ownership of those things. They can be
Mhm.
confiscated and taken. So to me, the risk is of having only dollar denominated assets in a world that is fracturing and breaking. And we can feel that, right? The global nature of the economy is fracturing where it's going to come back more of a national feel where everything's starting to reshore. That's a term you'll continue. Like, hey, we're going to bring back manufacturing here. Hey, we're going to do this here. And so the question is, does the dollar remain the global reserve currency? I don't think it will because no global reserve currency has ever lasted. We took over for the British pound. I'm trying to think of what the Spanish.
Does Bitcoin still have value though if US retains dominance with the dollar? Because I think that's a lot of things too, is people go, "Oh, I see the value of Bitcoin for a country that doesn't have property rights or things like that, but in
Sure.
America, it's like we can open a bank account." Like, why
Yeah.
can that negatively impact? That's what they
Yeah,
might
so
say.
if we lose, so if the United States loses the global reserve currency, let's say it goes to some BRICS gold backed currency thing that they're trying. It's not even Bitcoin. The standard of living in the United States drops dramatically. So like the standard of living here would drop dramatically. Bitcoin has value regardless of whatever the global reserve currency. It doesn't matter, right? Because
Mhm,
it is just money. It's just going to compete as its own version of money. Ultimately, there's this idea of I'm going to space on what the term is, but it is the best money ultimately wins. You're going to spend the bad money, you're going to hoard it and save the good money. Oh, I can't think of the term of that all of a sudden, but ultimately, like I said earlier, money coalesces on the one best money. And if you look at it, the characteristics of money, you compare gold, you compare dollars or euros or whatever, and Bitcoin checks more of the boxes of what you want in an actual money. So I do think, regardless of what happens, more people are going to adopt that as their desired money over time. How quickly, how fast is going to be dependent on lots of decisions that leaders around the globe make between now, the next decade plus. But Bitcoin will have a place. I think Bitcoin failing is it just becoming digital gold, a spot to hold value, but you don't really transact with it. We don't ever use it. You don't really see adoption. They just look at it like an investment asset. It's just a
mhm,
store of value.
mhm,
Maybe it overtakes gold, but it's just an asset that you hold.
mhm.
I think that's Bitcoin
That's
failing.
that's still a good return if you look at the market cap of gold
Yeah, if
versus
you
the
look at the
market
market
cap.
cap of gold, Bitcoin's
Yeah.
probably $600,000 or $700,000 in Bitcoin. That to me
Mhm,
is Bitcoin failing.
okay. From 38,000, that's a good return, and that's why I asked you too, is like when it's at full adoption is then because I think that people, especially, in America, like clients like that, they're gonna think of it more from like a portfolio standpoint as because they have assets, right? And I think this is a great solution for people who don't own assets, right? It's an ability to chip away and build something, right? But like a client's perspective, they're focused on the portfolio aspect.
Yeah, today in the United States, yeah, we're not desperate for a way to interact and transact, right? We have
Uh-huh.
a functioning financial system. Definitely in the store value stage. Definitely going to compare it to what are the other assets that I can store my value in? Stocks,
Mhm.
bonds, real estate,
Right,
gold,
right.
farmland, private business, all those things.
Okay, cool. So let's shift gears a little bit. So you want to go to your advisor and you're like, hey, I've determined that on my own, or it was recommended to me that Bitcoin could make sense as a portion of my portfolio, given the risk reward potential, given that I see the viability and the use case for it. What is for someone just starting out? What makes sense for how to actually store and own Bitcoin from your perspective? Because there's a lot of different ways to own it, obviously.
Yeah, yeah. So I think this is actually really timely because who knows when I'm not sure when you'll release this, but the ETF announcement it's going to come at some point, right? I think we'll have an ETF in the United States where you can just click and buy a Bitcoin ETF in your account. Now, again, one of the flaws of an ETF is going to be that you don't actually technically own the Bitcoin. You can never redeem the Bitcoin. It's
Right.
all a US dollar denominated, price tracking of the Bitcoin itself. So
So it's
all that being said,
exposure to
it's
the
exposure. And I think most advisors will go there because it's the easiest route. What you actually want, whoever's listening, what you actually want is spot Bitcoin. You want the digital bearer asset, just like cash or gold is something you can hold and you can self custody, right?
mhm,
You want something that you can actually hold because that's part of what makes Bitcoin unique is that it is
right.
unconfiscatable. You can't take it unless you give it up to someone. And that is the ideal way to own Bitcoin. And so you want that spot exposure. There are advisors out there that will help you get it. There's so I work for a company called Swan Bitcoin. They have an advisor product that will actually allow advisors to work with clients to allocate to Bitcoin. Right. And so that
Okay.
is something that you can do. There are other companies as well. OnRamp is another one that knows working with advisors. There are plenty of good options that are out there to actually hold Bitcoin the right way. Thinking about an allocation, there's a tool. Again, I'm going to plug the company I work for, but they do a really good job. There's
Yeah.
an open source tool from our CIO, Hafa Zaguri, came from traditional financial world, worked at Goldman and Deutsche Bank and Merrill, and he has built out models, built out products, and all this stuff. He created the Nakamoto portfolio tool. And so what you can do is you can actually put in your traditional portfolio and say, what would it look like with a 1, a 5, a 10% allocation Bitcoin, a 25% allocation? What if I never rebalance? What if I rebalance every year? And it's going to
Mhm.
always show you historical returns. But what you can get to, and what I would always try to talk to clients when I advise on investment recommendations, which I don't anymore, right? So there's
Mhm.
not investment advice other than
Which
life
is why it's
advice,
great to have your advice.
which is life advice is just don't have a zero allocation. And it can show you what it could look like. And the way that I typically look at it is when do I need this money? What is it for? And the longer the duration of that goal, the more Bitcoin exposure I probably should have. That's my rule of thumb. That's the Isaiah rule of thumb of allocation. I also don't think anyone should borrow the conviction of someone that's been in Bitcoin for a long time. I didn't jump in and have the same allocation from day one. I think I bought like a sub. It might have been like 1 or 2%, right? At the beginning when I first bought. It's not going to be a huge allocation. Once you have an allocation, you're going to want to learn more, and that's good. But if you save into an asset like Bitcoin, the volatility is not as bad. And so a good example, Dylan LeClaire from Bitcoin Magazine put out a post. It was the beginning of November. But basically, if you pick the all-time high of Bitcoin and dollar cost average in it from that point forward, you're
Mhm.
up like 40%, you're up 5% in gold, you're up
And what is
5%.
dollar cost averaging for those that might
So
not.
buying a little bit. So yeah, dollar cost average would be buying in just increments, whether it's daily, weekly, monthly. And I don't know if he had a
A
weekly
set amount.
buy. Yeah, a set
Mhm.
amount that you're just going to save into it. So think about it. I get paid twice a month. I have a certain amount left over. I'm going to send some to my Roth. I'm going to save some to my, taxable account. I'm going to save some to my emergency savings. It would just be like that dollar cost averaging where maybe you're buying the Vanguard ETF every month, right? It's just carving off some of that, putting it in something different. And so you can look at Bitcoin at the worst time to buy, and it actually works out really well when the volatility is there. If you don't try to just pick, because people will use the example, well, it was at 70K and it dropped. Rarely are people allocating their full amount to any investment at the peak top of any asset, right? They're probably saving into it or they work their way into a position.
Mhm.
Not everyone, I get that. They're probably with someone that bought a ton of
Jumped
Bitcoin at
in.
the very top.
Yeah, of course.
But for the vast majority of people, they're probably, again, dollar cost averaging or saving into it or buying it in chunks. So I like the Nakamoto portfolio tool because it can show you basically what's the risk level I'm comfortable with, what's the
Mhm.
max pain, what's the drawdown potential in this. And it's not just like, hey, Bitcoin's really volatile, I can't own it. It's like, okay, I can't own it in a 50% position. Probably, yeah, you probably can't. Maybe it's a 5% position. And so you can look at if you would have measured Bitcoin in cash over a 4-year rolling period since the inception of Bitcoin, 5% Bitcoin, 95% cash, it's given you any 4-year period you want to look at, 4-year period, it's giving you a better return than the S&P with much less volatility. So like it's crazy things that you can look at. Now, is that going to move into the future the same way? I don't know. I'm not going to tell someone to hold 5% in Bitcoin and 95% in cash. That seems silly, right? You can
Right.
own other things in different combinations, kind of get the right risk level using some historical metrics. And I think that's probably a good way to look at it.
And it is a short time horizon. 15 years is it's from a like a Lindy effect standpoint, I think that is a good but from an overall standpoint,
I love
that
that. Can I push back on that a little bit?
sure.
So the S&P 500 has traded less hours than Bitcoin has because Bitcoin trades 365, 24/7. So it's more hours have been traded in Bitcoin than the S&P 500 since its existence. Also, how relevant is the 1980s in investing when we live in a completely different world? Electronic trading, all these different things. So I struggle sometimes with historicals.
I guess Lindy effect though, as far as
Or
I
it's
know
going to
the
be
hours
around.
trading makes sense. I agree,
Yeah.
but there were even though the hours traded is more, there wasn't as many like systemic like opportunities for like wars and
Fair
terrorist
enough. Fair
attacks
enough.
and things like that. So I but it's a good point. It's a
Yeah.
fair yeah.
Yeah. But I hear that a lot that like Bitcoin's too new. When it's established, that's when I'll allocate. And I'm just like,
Yeah.
yeah, okay, cool. There's stocks and bonds, but like it is,
Especially
yes, I
when
get that it's newer, but it's not necessarily something that just came out in like the last year. Like it's traded for a long time that if it was, again, fundamentally flawed, if it, there are lots of people that would love to see Bitcoin be a zero and be
right.
destroyed. And
And
so there's
it
a lot
probably
of
would have
interest.
failed by
Yeah.
now,
There's a
would
lot
think.
of interest to make Bitcoin a zero.
Yeah.
And there's a lot of attack vectors, and those have all been tried. I always joke that Bitcoin is like the cockroach of money. You can't kill this thing. It's been
Mhm.
declared dead over 400 times. There's a website that tracks it when everyone writes articles or does different things. Bitcoin is just a unique asset from that standpoint where it's going through a monetization cycle. We've never seen an asset monetize in our lifetimes or probably any lifetime of someone listening. We've never just seen something go from nothing to money. And like we're living through that. And I think it's a special period, which is why, again, I think it's the story of the decade.
Yeah, absolutely. Okay, so just a couple more questions for you. Let's say I determine, hey, I want to have a 5% allocation to Bitcoin, just randomly saying. How do I determine what types of accounts to own it in? And again, if I want to own it, like a custodian or do self custody, like how do I go about deciding what makes sense for me?
Yeah. So you can own spot Bitcoin. So the real thing, right? In a taxable account, Roth IRA, traditional IRA, if you have a rollover from an old 401k, any of those things. So you have a lot of flexibility where you want to own it. If you believe, like I do, that you think Bitcoin accrues a lot of value, I think a Roth IRA makes a lot of sense, right? Because it's tax free growth and tax free when you take it out in the future. I think a personal account is nice because of the volatility. You can tax loss harvest if you buy it, let's say at a time and it goes down and you're like,
Sure.
shoot, I wish it would have not done that.
And no wash sales with
Yeah,
that
and
as
there's no
well.
wash
True.
sale rule as of the recording of this,
Uh,
which a wash sale rule, like historically, if you buy Apple, you sell Apple, you got to wait 30 days till you can rebuy it to book the loss. Bitcoin, you can buy, sell, book the loss, and never actually be out of the position. So you
right.
don't lose that price exposure or the exposure to the asset. The other thing to think about is, I just lost my train of thought.
No,
What
you're
was your,
good. Just basically what types of accounts to own, and then should you go
yeah,
self
custody.
custody
Thank
or
you. Yeah, yeah.
custodian? Yeah.
Yeah. So I think one of the key things that has been highlighted is like these dodgy custodians that have gone bankrupt and they
Yes.
equate that again. Those are a lot of crypto issues, but they equate it to Bitcoin because it's all in a lot of people's minds, it's all the
Conflated.
same thing. So it gets conflated. But at the end of the day, Bitcoin is a bearer asset. You can digitally hold it yourself, where you have your private key that you own. And that's the only way to move those funds. You sign a transaction, you can move it, and then until it's signed again, it is yours. It is held. There's nothing anyone can do to take that from you. I think ideally, the way to own it is with your own self custody, but there is custody that you can have with a custodian. I think early on, it's just buying Bitcoin and getting comfortable with buying is hard enough for some people. You don't
Yeah.
need to say, hey, you got to do all these other steps after you buy it. So buy it, have it there, but then learn. You can also do something called collaborative custody. Collaborative custody is where you need two signing devices or two keys to move the funds. So similar to, let's use an analogy of a door. So you have the deadbolt and you have that other smaller little lock thing, that's there. I
Mhm.
can't think of the right term for it. But you have let's say a unique key for both. It's not the same key. Two keys go in, you open the door. So let's say a partner holds one key. They can't open the door, but they can unlock one of the locks. You come along, you unlock the other one, you get in, you have your funds. So you can use your two keys. You never have to ask the person. Or let's say you lose one. You're like, oh, my dog ate it. My kids threw it in the toilet. Something happened. It got destroyed in a fire, earthquake, whatever. You have another key and you have the key of that collaborative partner. You can still get your funds. And so that's a nice kind of middle ground of having a little bit of help, but not fully going DIY and doing it yourself. And I think that's a great spot for a lot of people early on to make sure that they don't trust a custodian because you don't have to trust anyone in that environment. It's all on you as the user, but you have a little bit of a backup, kind of that,
Mm.
oh God, what if something happens?
So let's say I'm not even ready for that. I'm not ready to self custody on my own, have my own hardware wallet and store my key, and I'm not ready for that. And I just want to buy it on the custodian. How do I determine if the custodian is reputable and because and has the financial health? Because we're not getting the same level of coverage as you get with stocks, right? With
Excellent.
SIPC, right?
Yep. I think that is a little bit of an art and a science, right? There's lots of things that people can say. They can say, hey, we do proof of reserves, we do this attestation, we will ensure that your money is there. I think it's going to a custodian and asking like how their security setup is done, how are the keys stored, who is their partner, and how long they've been around, and have they ever had a breach? Those would be kind of the questions that I would ask. Ultimately, I think the goal should be that the custodian is there temporarily and that
Mhm.
longer term, I'm going to take self custody in some sort of way.
Okay.
There are, I think that question comes even more into the forefront with retirement accounts because a lot of retirement accounts, there's kind of this gray area with custody rules where you still need to have those accounts where you aren't taking self custody a lot of times, or that needs
Right.
to be in some sort of collaborative setup. So that might be where I would actually have those questions more or less.
Right. Because
I
if I
have a
own it in a
longer
Roth
answer, but I don't
IRA,
want to
I
plug. I
can't.
don't want to plug the company that I work for and be like, make this a sales pitch. Like there are good custodians. There are folks that are trying to do things the right way, but
Mhm.
ultimately, the whole ethos of Bitcoin is you
Direct
verify
ownership.
and then trust. You're not just trusting out of the box, which is different. That's a mind shift difference. When we go to a bank, we just instantly trust because it's a bank, right? They've gone through regulation, they have these things. And in Bitcoin, it's just you got to approach it with a little bit more of an adversarial mindset.
Mhm.
So, yeah,
So it's tough to say that the owner, the holder of Bitcoin has to take some self-accountability, and then if you're gonna own this asset class and you wanna potentially experience the returns that could happen, you have to, be responsible and learn how to hold your Bitcoin.
and that's where I think an advisor, candidly, can do
Yeah.
wonders for their clients that they work with, right? Come alongside someone and say, hey, I get it. You're still new to this. I'm going to help educate you along the way. Like my job at Swan is helping someone in their Bitcoin journey go from, I really don't know anything about this to I'm holding my own keys. I know how to do self custody and I'm buying Bitcoin, whatever interval they're doing it. They feel a lot more comfortable than where they were at the beginning and they're
Yep.
learning about those things. And so that's part of it. You're not going to wake up overnight. It's the same way just with traditional finance. Like a lot of people, they don't know a lot about stocks and bonds. They don't know the difference between mutual funds and ETFs. It's like that's where an advisor a lot of times educates them anyways. So there's tons of resources, lots of good information out there around Bitcoin. And I think it's much better than it was in the past, where it isn't scammy or slimy or people trying to teach you trading strategies. It's an asset you want to buy. You want to continue to buy it. You want to hold it and you want to figure out what's the right allocation for you and your family. And I think you'll be in good shape after that.
Sounds good. Sounds good. I really appreciate you coming on today. I will end the podcast. If you just want to give one way that you do more with your money, it can be anything. I think I have an idea of what you're going to say, but just one way you do more with your money. Could be quantitative, qualitative.
Yeah. So I'm going to say if you have kids for one of their birthday parties, the best money that I've ever spent was buying a bounce house or renting a bounce house for a 3-year-old for a birthday party. And it was amazing. The kids
I
had
love
a blast. No one got a knee to the face or like no broken noses.
it.
So maybe we lucked out there. But seriously, it was like the best money I've ever spent. You just got to sit back and watch all these young kids just have a blast all afternoon. And to me, I think having and making those experiences as a family, that's the best use of money. We can talk about saving all day long. We can talk about why Bitcoin's better money. We can talk about investing in stocks. Ultimately, like, what is it for? And I think it's for those kind of memories and those moments where, shoot, like that's why you do this stuff. That's why you go to work. That's
Yeah.
why you went to college. That's why you spend all that time.
Financial
So
planning,
that's the
exactly.
thing.
Yeah.
Like, what is it
Yeah.
for?
That what's the Bitcoin for? What's the money for? It's
Yeah.
to create the experience. So I
Amen.
love that. That's amazing. Thank you. And then lastly, where do people connect with you or where do you want to connect people best?
Yeah, you can go. I'm on LinkedIn. I'm on Twitter or X. So ID Financial there. Isaiah Douglas on Twitter, or email me at Isaiah at Swan Bitcoin. Happy to answer any Bitcoin questions with anyone that listens to this. If you just want to chat Bitcoin, you want to tell me why you think I'm wrong about Bitcoin, I'm cool with all.
Yeah.
Come and poke holes. And I joke with people all the time. I want to know if I'm wrong about Bitcoin sooner rather than later, right? So
Right.
embrace the pushbacks.
Absolutely. And that's why I love talking to you about it. Well, thank you for coming on today. It was a pleasure.
Yeah, it's great to see you. Great chat. Thank you.
Take care.